Welcome to TradeTheNBI.com. This is John. This report is for the 3rd of February. Well, it continued to positive note for the S&P. Got to the 61% though and hit some selling. Still clean though from a DOC standpoint with green rising and shorts moving below 7.5 down to 971 here with DOC red still ticking up. Be interesting to see what happens here because it doesn't not very often where on a daily cyan goes below red, particularly down at these levels, because usually that happens when DOC red is over zero before that takes place. So some interesting market dynamic as far as that goes. Continued rising on the shakeout, but you can see yellow last couple of extremes here, so reaching that extended overdone potential there. Not quite positive extremes, but often those do fill back in place. Just a little bit less conviction unless you get significant sell-off situation. Now here from an NQ standpoint, got to the 50% and was rejected hard, and you can see the red NBI moving close to parity with the magenta. That's significant because a dip down in magenta there would leave red on a daily above, and I would expect at that point to see a spider effect of green moving lower, and that would be the first real indications of a stronger short configuration. I know Facebook and some of the others missed dramatically from a tech standpoint. Gold right at the 50%, and you can see the strong move of magenta over, and we would expect that to continue because inflation is still not anywhere near under control. Interesting from an ECB standpoint, they've got a big announcement coming out on rates. We just had the report that inflation in the Eurozone was through the roof. Surprisingly, though, Italy was substantially lower than most of the other Eurozone countries, but needless to say, they've got a problem as well. Do they raise rates or leave them? Pretty tough when you see how vacant a lot of European cities from a travel standpoint, as well as mobility and growth. So that red NBI leading definitely is going to have that impact, pull things back. Plus, it also got overdone, and the potential fill coming back before the dip below the red line, which would have a move all the way back to that 0 point. So a little bit of short cover setup in that one. Oil still at its peaks. That's just problematic every day that takes place. And while rates started to fall a bit, that pulled off really quick. As that debate still goes on, whether or not there's going to be, a significant increase in March, whether there's going to be any at all. The numbers that came out for jobs and that were horrible coming off December, which surprised a lot of people. So that lends to the idea that maybe the Fed will be softer. Bitcoin rolled over pretty quick, right up at the peak there. White NBI took the lead, flipped to red on that one, and proceeded lower straight from there. And not a surprise, we were expecting that kind of fade off between this peak of 39 to 34, which has been the range that it's been playing at. Really nice action coming out of ETH though, as we got midpoint into the day, boom, the sells kicked in, and once that magenta faded below 25, and then it just kept accelerating. Did catch some late covering on that, but has resumed a little bit of softness as we go into the Asian setup. 50K standpoint, likewise the white started leading over magenta, which is not the end of the world. It just usually means a slowdown, and then once magenta dipped below, that was the end of it, and then we started cascading here in the post market, and all that really is a fill of the positive extremes, which still has a little bit more to go, the low of that being 45.23. So still some room left for that to potentially hit. From an intraday standpoint, we had the continuation coming off of the previous nice move, but as we talked about, all on positive extremes that extended all the way through. And once the selling came back, where did we expect to go? Right back to that 45.35, which is exactly what happened. Then there was some midday rally taking place that went through right there, also producing positive extremes in that exchange. And and then as we came, it was getting chaotic up at the 100% range, and there was room back and forth on that. But every time we dipped below the 25, it was sort of like with the magenta, it was giving that indication that it could be a little bit more severe, but magenta kept holding on, but it kept doing that, and then finally white MBI led, and that was the final catalyst of that dip below the 25, and then boom, it was clear right there, and there's the cascade that took place right after the close, and filling in all those positive extremes and moving right back again to that same 45-35. So what we're left with is just some really decent ranges again, from 86 to 44 intraday on that move. That's pretty darn clean and effective, at least from the later part of the day, and still offered plenty of both long and short throughout, which is that continuation of uncertainty and volatility that is not dying off anytime soon, though people think that there's been a softening of the short gamma and things like that you'll hear about, but just from our reading standpoints, we have a bullish push that looks like it started to lose its steam there with several of the readings, and the NASDAQ rolling over quicker really compounded that. Left us where we're at this particular stage, which still, when we look at it from a daily standpoint, nice turnaround, 50%. That's where we're going to be looking, right around that 45.10, which corresponds to that 45-20-ish range, and that will be the test at the 50%, and whether or not institutions will want to encourage additional activity there, and that's what we'll be watching for that magenta flip down, because at this point, with white continuing to rise, it wouldn't take much of a turn down of magenta for white and red to be in the lead, and that would be bearish very quickly. So we're on top of it. As always, though, I will be on the Skype chat. Trade well. Talk to you later.